Comcast saw its chief financial officer pull the plug on a chunk of shares, reducing his stake by 32.7%, as shares went on to set a multi-year high stock price. On November 1, CFO and Vice Chairman Michael J. Angelakis sold 134,170 shares of Comcast ticker CMCSA for $5,064,171, an average of $37.74 apiece, lowering his direct stake in the company to 221,961 shares, a stake of less than 1%. Angelakis, additionally, indirectly holds 86,563 and 54,733 shares by trusts. This is his second transaction of the year. His most recent previous transaction was on May 25 when Angelakis sold 179,700 shares of the cable giant for $5.2 million, an average of $29 each, through a 10b5-1 selling plan. Angelakis joined the company in 2007 and is a former director and member of the management and investment committees of privately held Providence Equity Partners. In an interview with Barron's.com, a spokesman for Comcast says, "This is a part of his estate and philanthropic purposes." On its website, Multiyear recently noted that current sentiment within the consumer discretionary sector has trended more towards selling than buying and that insider volume continues to be low as companies await the release of third-quarter results. Shares reached the high of $37.96 on Friday. Adjusted for splits and dividends, Comcast hasn't seen that number since February 2007. Shares remain near the recent high, closing at $37.43 on Monday. On October 26, Comcast posted a better-than-expected third quarter and analysts remained bullish, with many citing an uptick in viewership during the Summer Olympics as a big positive during the quarter. In an update that same day, analyst Thomas Egan of Canaccord Genuity kept a buy rating on Comcast and a $42 price target. Todd Mitchell of Brayon Capital reiterated a buy rating and $40 price target in his note. "We believe Comcast's cable operations outperformance is due to a more strategic approach to product development, while an increase in capital returns will be enabled by proceeds from the sale of assets and lower underlying leverage," Mitchell wrote in a research report.